Good evening, Dan Fitzpatrick here at StockMarketMentor.com on Thursday, June 7th. And today, in a real quick video here, we're going to look at the FAZ. Okay, this is an inverse triple leverage ETF on the financials. So as the XLF goes down, the FAZ goes up. Today, you know, this thing gapped way down and actually closed up a bit. Here's the thing. If you just looked at this on your own without really knowing what it was doing or anything like that, nothing to really confuse you, you would look at this as a really solid breakout from a volatility squeeze and want to buy this thing, you know, at the best time. Oops, missed that move. First pullback, thought it might be going a little bit more, so I missed that as well. Well, here we have a higher high. Now we have a low that's about this same level. So this is actually, well, this morning, first thing, was the best time to take that stock, but, you know, that's woulda, coulda, shoulda, right? The bottom line is we've got heavier than average volume today on a gap. The stock gapped down, ETF, whatever. The ETF gapped down as the market gapped up, and then this started trading up all day. So forget about what's happening with the overall market on this trade. Let the trade take care of itself. This is on a big pullback. It's the inverse of the typical 3-day rule where the smart money buys on the first day, the second day, the semi-smart money buys, and finally on the third day, well, let's just say all the knuckleheads are buying, and that's that. Here, the smart money sold on the first day, the semi-smart money sold on the second day. Today at the open, that's where all the knuckleheads were selling, and ever since then, this has been moving higher. So what I want you to do, following that same rule, is this. This is a pretty easy trade here, at least to frame. And I've talked about a good trade as opposed to a profitable trade. Big difference. Here, a good trade is looking at 25.41 as that's the intraday low. So you look at 25.41 as your reference point for a stop. Put the stop, a fairly snug one here, because what we're doing is we're trading this low as well. So put the stop, say, at 25, I don't know, 25, something like that. I'm not really relying on the 50-day moving average because that's too far away. And the whole reason for getting in this triple ETF is to take advantage of that 3-day rule. Today, the real smart money bought this, or they sold the financials. Tomorrow, the semi-smart money is going to be doing this. So let's be the semi-smart money, okay? Take this thing for a ride, a short ride, but if this falls below today's intraday low of 25.41, then you want to be out of this. Don't be stubborn. Good traders aren't particularly stubborn. Stubborn traders aren't particularly good. Okay, members, get over to the strategy session.